Thank you so much for joining us today. So today is our property networking, and as we know, well, although I think Paul will disagree, but I'm going to say it anyway, your network is your net worth for some of us. But what we wanted to talk about today is deals, anything about deals. And I know just in the room, we've got some deals. So do feel free to, jump up and talk to us about your deals. Hi, Robin. And if you've got any questions about your deals, I don't know if we'll be able to answer them, but we can certainly try. But we thought it would be really interesting to see the diversity of deals that are out there. And I know we're looking at a few biggies here, but I do have a smaller one if we wanted to touch on some smaller ones. So just a quick run around the room to introduce ourselves. So yeah, my name's Emma Howitt. I run a company called Pureabodes, and I started off just a few years ago. So I'm a real newbie. And started with no knowledge and not really any money. So did rent-to-rent serviced accommodation, and then has moved on into development. And we last year developed a hotel with Yuri, who's also here. And yeah, and this year we're looking to do some quite juicy mega deals to jump things forward. So that's exciting. So I'll pass on to, we'll do ladies first. So Wendy, would you care to introduce yourself, please?
Yes, hi. I've been in property for about 6 years now in partnership with my sister. We've done some new builds, a bit of buy-to-let, and then serviced accommodation, and really love the short-term let model, and are now looking at hotels. And our first hotel concludes on Friday, fingers crossed.
Fantastic. And let's do I don't know, let's go with Paul next.
Okay. Sounded like a second choice there, but never mind.
Only in your head.
Yes, only in my head. Yes. I always forget that this is, as I was saying before we kind of went live, I always forget that this is also on kind of, well, will be on YouTube, and is obviously on Zoom. So I was kind of sitting there ready to do a clubhouse with unshaven and kind of bed hair, and kind of like sitting about this morning pretending that nobody was going to see me, right? I've had about 6 meetings this morning, but all on the phone. And then I realised that it was a Zoom call, so I was kind of rushing about and getting half a shave, right? And kind of straightening my hair to the best of my ability. Oh. Anyway, I fit into that category of the perfect face for radio. So introduce myself, Paul Murray. I have been in business for 45 years. I started when I was 15, just in case you want to count. And I have been in the property industry for 3 decades almost now as a property developer, both residential and commercial properties. Also been a consultant for major PLCs, for regeneration agencies, and for smaller businesses alike. Currently in the process of selling up the vast majority of our portfolio, debt-free portfolio, as I moved to being an angel investor and venture capitalist and spend more time being a business consultant. I think that about sums me up.
Wonderful, wonderful. Thank you. And next up, Yuri, please.
Hello, everybody. My name is Yuri. Originally from Moldova, which is ex-USSR Republic. Came to UK straight into the building site, learned carpentry. Then I was a main carpentry contractor for a development of 116 flats in London. That was 15 years ago now. I've done a lot of things since then, auction purchases, developments, small developments, and all that. And 2 commercial to resis. My last 2 projects, the latest is the hotel with Emma. And looking forward to have a chat to you today and connect and see what questions are in the room.
Fantastic, fantastic. Well, let's kick off. So I know Wendy's got one literally burning. Did you want to talk through your deal first, if that's okay, Wendy?
Yeah, absolutely. So we've been looking around at the apart hotel model, and this deal came across about 3 or 4 weeks ago. Essentially, it's a small hotel. It's got 6 letting bedrooms, and it's got a bar and restaurant. on the ground floor. Now, we weren't particularly looking to run a bar and restaurant, but it is running very well. So the idea is that we will take it on as it is and operate it for a period of time. And then, we may turn the ground floor into rooms, depending on how things go. The rooms are needing a little bit sprucing up. The building itself is great, so it's not going to take much to be able to increase the room rates, and that's how we're looking to add value and increase the business that way. So it's very exciting.
Amazing. And is it purely leisure? It's up in Scotland, I presume, is it, or is it?
It is, yes. It's in the east of Scotland in a little village called Markinch. It's right next to a railway station, and it's got a mixture. So there are a lot of companies in the area, so there will be the opportunity for some corporate stays, and it's also for leisure as well. Being close to the railway station, you're an hour to Edinburgh on the train, a bit longer to Glasgow, and an hour and a half up north. So it's quite a central location if you're coming to kind of visit the area. And Fife's got some wonderful golf courses and lots of other sort of touristic attractions. So I think it's going to be, it's going to be good.
God, so there is another up north, isn't there? I mean, I just presumed that everything in this country is up north as far as I'm concerned, as I'm literally on the south coast. But interesting. So was this kind of just a straightforward up for sale, normal valuation, or are you looking, obviously you've talked about a refurb, are you looking at sort of adding value in different ways? What was your sort of plan, and what attracted you to it, I suppose?
Yeah, so I guess what attracted us to it was the opportunity to do, we're doing a lease option on it. So we're going to lease it for 18 months and then purchase at the end of that period, giving us the opportunity to increase the income and its value. It's being operated at the moment not particularly well. There's great opportunity there to increase the restaurant and bar side of the business, or we may sublet that part of the business out to an operator. We're undecided at the moment, but there's also space downstairs to potentially have another 2 bedrooms. So we'll add value by sprucing up the rooms and increasing the nightly rate. That's the first opportunity we see. There's potentially opportunity to add a further 2 rooms to the offering, and then to rent out the bar and restaurant space, or convert that into rooms. See how that goes.
Amazing.
Yeah, I mean, ideally we were looking to do similar to what you did, complete apart hotel, but because the food and beverage offering is running okay at the moment, and there is opportunity to improve that, we thought we'd give that a go. We've got other apart hotels in the pipeline which are more similar to the model that you did. We've got a 15-bed one that we're getting. It should go through mid-April, and this one, probably 6 of the rooms will be knocked into 3 rooms, and giving us that bigger space to put in the kind of kitchen type facilities that you're offering in your space as well. So that one will probably take us a few months to get that kind of works done. We're debating whether we operate it over the summer as is and then do the work in the winter. Don't know whether what the best way is, but we're still working through that.
Amazing. Gosh, lots going on. And guys, do feel free to jump in and ask any questions. But did you want to just run through the numbers on this one? So obviously, as an option agreement, that's really interesting. And I know a lot of people are very interested in that model.
Yeah, so we're basically, we've agreed what we're going to purchase it for. So we're purchasing it for 395,000. We're putting down a deposit of 25,000. And in Scotland, because it works slightly differently, we are concluding the purchase on Friday, along with taking on the lease option for it. Whereas I think in England, there's a bit more flexibility, as in you're not committing to buy, where we are committing to buy. We've done projections and the future valuation. So we see the valuation, a business valuation on this property just now at about 660. And with the increase in income that we're projecting, we're hoping to get that to just round about £1 million.
And how come you've managed to get it so cheap. So you basically, yeah, you've got it sort of very, very cheap.
Yeah, I think it's being sold by somebody who hasn't really put much attention into it and is thinking more he's selling the building rather than the business that goes with it. And they just want a quick sale. They just want it out their hair. But they have been able to do a bit of flexibility with us over the time scale of that purchase.
So are they currently living there and running it, and they're looking to move elsewhere, or?
They actually operate several other businesses, and so they purchased this a year and a half ago. It's not really part of what they offer. They had a play with it. It's not for them, so they just want to shift it. They're expanding their chain of supermarkets, and so that's where they want their focus to be.
Amazing. Paul, I can see he's battling with the mute and the unmute.
I am battling all my life, battling with technology ever since it arrived. Just want to kind of focus down a wee bit for people who may not be in Scotland to kind of understand the Scottish system and touch slightly on what Wendy was saying. So it's slightly more complex than England, or differently complex than England, in terms of in Scotland you can't do a lease option, or you can't do an option on a residential property. Actually, that's an exaggeration. There's no law against it, but you'll find it very difficult to find a solicitor that will do an option on a residential property in Scotland. But you can do options on commercial properties in Scotland, and this one of Wendy sounds like it is a commercial property.
It is.
So the way she set this up is the way they've chose to set it up, but they could have set this up with two documents. People get confused with a lease option and think it's one document. It's actually in an ideal situation, two documents. One document is a lease. So in this case, that would be a commercial lease, right? And you could make that lease as short or as long as you wanted to, if both parties agreed to it. And then there's an option to buy. Now, we also quite often in Scotland, because we don't use the lease option system on residential properties, we have what's called delayed completion, which in all intents and purposes gives you the same result as an option. The only difference is that you're committed to buy it. And that sounds like what you actually went for, Wendy, is you have went for what's called a delayed completion rather than an option. Because if you had an option on the property, you would have an option whether you chose, because it's commercial, you could have an option on it. So you would have an option at the end of the period of deciding whether you wanted to buy it or not. And in an ideal situation, given that you're going into something new and you don't know how well it's going to work, your solicitor should have probably advised you to go for a lease option agreement rather than a lease delayed completion.
Yeah,
Is there a reason you didn't do that?
Yeah, it was discussed, but the owners of the property, they weren't up for that. They basically wanted the property sold, but they were prepared to give us a bit of flexibility on how we paid it. So this is why we've ended up with this agreement. In terms of the kind of risk, if this wasn't to work as a hotel, many years ago, this property was 2 semi-detached houses, 4-bedroomed houses. So the option would be to refurb back to housing and sell it on as that. So we kind of, we see exits and opportunities for this building with, regardless.
So one of the ways, I don't know if you've gone as far as putting the blood on the paper yet, but signed it in blood yet. But one of the ways that you could kind of structure this deal is you could say to them, look, we maybe want to put planning consent in for taking the restaurant space back into some form of commercial housing, right? Whether that be hotel, park hotel, serviced accommodation, whatever. And what we would like to do is we'd like to put a condition in that we're acquiring it subject to planning. Now, if you did that, you would be giving yourself essentially an exit door, so that if it didn't work, you could then say, well, look, we didn't get the planning that we wanted, because subject to planning is a really interesting way to do something, Because what you tend to do is when you do subject to planning, there's a clause that goes into it, and it's to the satisfaction of the purchaser is the clause. So let's say that I hypothetically buy a property off of you, and I say it's subject to planning, right? And if I can get planning for 6 houses, then I'll buy this. And you say, well, that's fine because I think you're going to get planning for 6 houses. But there's a wee clause in the back of it that says subject to the purchaser's satisfaction. And I could say, well, actually, I got planning for 6 houses, but I wanted them to be green houses and they're blue houses. So I'm not going to buy it. So if you want, if you haven't signed in blood yet, there's still an opportunity to kind of put an exit door in there, which would essentially, in legal terms, still give you an option on the property rather than 100% commitment to buy it.
Yeah, I can certainly have a chat with them today.
And what about being assignable as well? Because that's another way that if you could, because you're in between, you could still assign it and somebody else could come in and purchase it. I don't know if that's allowed in Scotland. We can do it down here.
Yes, you can do a signing in Scotland. It's an option to sell. So one's an option to purchase, the other one's an option to sell. So quite often, if I'm doing kind of back-to-back deals where I know that I'm going to sell a property on, trade a property essentially, because a lot of what I did in the early days was trading property. So if I know I'm going to trade a property, then I can get an assignment in the agreement and I can do what's called a back-to-back deal, which means that I buy it at say 11 o'clock and I sell it at 1 minute past 11, and it's paid for by the purchaser's funds and not by my funds. So therefore, I never have to part with anything except for some legal fees. So the interesting thing about Scotland is people sometimes go into afraid of the kind of Scottish system, and it's a much more. I heard an English solicitor describe it once as a more civilised system, because we don't tend to get gazumping here in Scotland. We tend to kind of, once you've made a commitment to buy a property, but there is I don't know whether you want to have a wee chat offline at some point, Wendy, but there's 100 ways to kind of to structure a deal that an unsophisticated seller wouldn't understand, that you're still leaving yourself an option to come out of the deal if you don't want to do it.
Yeah. Okay, that'd be great.
Okay.
Yeah. Exciting. I'm really looking forward to to following that up. So inherently, is the plan then to just literally take it over, give it a bit of a light zhuzh, and then potentially either do better with the restaurant and bar, or I quite liked that subletting it out, because it really reminded me of the Premier Inn, what is it, Harvester model? No, it's not Harvester, isn't it? Whatever it is. But I really love that. You know, the hotel are experts in hotels, and then they've just, you know, tied up with a you know, a restaurant that are good at restauranting, and I'm just loving that kind of collaboration. So yeah, bringing anyone in.
Yeah, well,
I'm not sure that we have GG in Scotland, or I'm not sure that we have that in Scotland. That's a
Well, you did a bit of GGing this morning, Paul, when you were making your face ready for the TV.
To make my face ready for TV would take a lot more than that, I think, to be honest.
Oh, I love it. I love it. Sorry, Wendy.
Forgot what I was going to say.
Yeah, no. So you're just literally just getting going with it, are you? Is it just a light refurb, or are you literally gonna do anything before the summer, or?
No, I think so back to what you were saying about subletting the restaurant. I mean, you know, I am at risk of creating with this project, and that's not what I'm in this for. So it's I guess we'll see how easy it is to manage from a distance, that side of it. But I suspect the easiest way is going to be to sublet it to a third party to run that side of it.
Amazing. And Robin's got a great question. Said, Wendy, would you be given a valuation based on the commercial income? And if so, how do they value that based on short-term lets? That's a great question, Robin.
Well, this is one of those questions I'll probably ask back to somebody else. The valuers, it's like a dark art, isn't it? So I have been round the valuers in Scotland saying, you know, asking this question. I think I've asked you, Emma, how did you get your valuation? There doesn't seem to be any one answer, and it depends how they feel on the day, what the weather's like, and all that kind of stuff. I know of someone recently who got their apart hotel valued at 10 times EBITDA. So I have been calculating mine based on 5 times, just to be really, you know, to kind of give myself plenty of room. And the valuer who's doing the valuation sort of said, well, yes, it'll be about that, and then we add this, we take away that, we take that factor in, and you know, there is no defined way of doing it. It depends on the area, it depends on the type of clientele, it depends on, you know, what else is available. There's all sorts of factors they take into account. But I think as a rule of thumb, if you go at 5 times EBITDA, because in this industry, I think it's 6 to 7. I don't know how the Sweeney brothers got their 10 times, but I've been trying to find out who that valuer is. But yeah, I don't know what your experience is, Paul, of valuers commercially in Scotland.
I love commercial properties for that very reason. I think everybody in the world thinks they can value a residential property, you know, because of things like Zoopla and Rightmove. And what I like about commercial property is that everybody can't do your job. Although there's more and more people trying, I must admit, one of the reasons I'm getting out of my job. But it's interesting. Commercial property is very interesting, and especially hybrid commercial property, which is what you've got, which is a hybrid commercial property, which is kind of venturing into a couple of different industries at the same time. So that'd be a really interesting one to value. I think I don't like to I very rarely like to play my 30 years in the business card, right? But I'm going to play my 30 years in the business card. I think we are very privileged in that we can work with valuers because they understand that we understand what we're talking about. So when so I'll give you an example. We had a valuer look at a commercial property in November, and he came back with a kind of rough valuation. I tend to have conversations with valuers rather than employ them and then get a bit of paper at the end. I don't really work that way with anybody. And he came back with a figure, and I love the way he put it. I was thinking, Paul, of £650,000, and I said, well, if I was you, I'd think a lot harder. And we came back, and after we presented 1 or 2 things to him, which again, if you want to have a chat, Wendy, right? He came back with a valuation, £8,000 over £1 million, which was a very odd valuation, £1,008,000. I don't know what the £8,000 was for. Maybe it was his fee. I'm not sure. But that was the valuation. So that's a substantial £400,000 difference in valuation by being able to present to the valuer reasons why. Right. And that's what I like about commercial property. I mean, it'd be very hard to move the house, the price of a house, a residential property, by £400,000. That would be, even for me, I would consider that difficult. But to do that in commercial property isn't as difficult as you think. And it's about working with valuers, but bringing them evidence that they haven't perhaps looked at or thought about. And then kind of like qualifying that evidence and bringing in some expertise to show that it can be done. So in commercial property, it's rarely a good idea just to have a valuer, you know, give a valuer a blank sheet to just go in and value something, because they're going to miss things that you know about that property or potential with that property that they don't know. And why should they? And I think it's one of the issues with people not used to being in commercial property, dealing with commercial property. They're not going to get the best valuation for that property because they're just going to go to the expert. Well, I would argue that the expert on any property is you, because you own it. Or you're the purchaser of it. So don't presume that somebody's got some letters after their name and they're the expert. You're the expert. You should know more about that property than they ever do. And I probably know the exact property that you bought, strangely enough, because I know that area quite well. So we'll have a wee chat offline. But yeah, commercial property is really interesting. You want a really good valuation for commercial property. Don't rely on someone else to do the work. It's your job.
Yeah, I basically produced a business plan and shared that with the valuer, and I did have those conversations beforehand as to why I thought this is what the property was worth, and he's concurred, so that's good.
And I think that's really key to pick up if you know, other people don't understand or know this, that you know, exactly as Paul has said, and what you've done, Wendy, is to have this whole kind of, you know, you're not just going to your mortgage broker and asking them for a valuation. It is with this complete supporting documentation, everything that's in there. And it's a much bigger, you know, sort of project, so to speak, that you are bringing to the table, so to speak. But yeah, I think from our perspective, we've valued ours like bottom up, top down, side in, left in, kind of every which way, and pretty much they've all come to a very similar level. So that's been you know, been interesting. So yeah, so obviously you've got your plan of how to sort of increase it to get to this level that you need, but obviously the actual purchase price is potentially quite low in comparison to that. So exciting. Brill. Okay, well, let's
Sorry, can I make one more point just before we move on from kind of surveyors and valuers, right? Have a cynical kind of approach to surveyors and valuers. I think lots of people come into this industry and they think valuers are God. And to me, that, you know, surveyors are like Santa Claus. I don't believe in them. So just don't presume that they have all the answers. You know, I literally, you know, that's a phrase I use quite often. Even the surveyors are like Santa Claus. I don't believe in them. Meaning just because they have an opinion, that's what it is. It's an opinion. It's not God has spoken. That's when I have an opinion.
I love it. Okay, so yeah, next up, Yuri, did you want to bring up a deal?
Yeah, I was gonna talk about a deal that we've been presented by one of the developers. He's based up north in Cumbria, and is developing a few blocks of flats in London, and he's getting so much work. He's a bit overwhelmed with work, and financially is you know, the cash flow problems and all sorts of stuff is going on there. And he said, I need a business partner to help me. It's a bit too much all over me. So yeah, we start to analyze his deals and what he's doing and the way he's doing, and to see if we can help, obviously, and if we can, then great. You know, we'll be doing this together. So the deal I was going to talk today about is in south of the river in London. It's a block of 14 apartments and 3,200 square foot commercial on the ground floor. So very interesting, quite nice looking block, brick clad. It's a couple of 1 beds, 2 beds, and 3 beds apartments, quite large. And yeah, the numbers. He found, obviously, Hampshire Trust was going to lend him the money to do it, but they needed him to put down 1.6 million on a GDV of just shy of £10 million. So he approached a family office, and they said they will lend him the money, 1.6, not 1.6, 1.3 million, if he can put 300k in the deal, and they want interest rates on this, and they want 50% profit. So he is 50% less profit, and he still needs to find £300,000 to begin with. And he's done all the work. He's got a team of builders, so basically it's self-managed. I mean, there is a manager employed, will be managing the build, and is all under control. So this way he can save on building costs. And when I looked at that, his total build cost is £190 per square feet, and that's a new build in London. So it's quite well low, should we say. But because it's self-managed, then potentially it is possible, because what we've done with the hotel as well, commercial to resi, we managed to do it for 850 a square meter, which is low, but because we're self-managed, we had subcontractors and all that, a bit more time consuming, a bit more stressful, but you are in the total control of the things, quality, money. Obviously, nobody is gonna screw you up more than, say, a week's work. And basically everything is based on him developing the apartment, the block. And rough numbers are the purchase cost 3.4 million. There is section 106 in there, which is £564,500. Quite large though. There is agents fees as well, 51,000. And after that is all building costs and stuff. So there is a cost to put a lift, services connections, 10,000 each, including the commercial, a bit of for demolition, but there is not much to demolish. Professional fees is quite large amount in there, and contingency 7%, which again, it's on the small side, but recently I think we've seen the building materials prices going down, or they don't go down, but the building merchants, they offer, they're doing offers. So basically it's a bit less of a struggle like it was last year and the year before. Basically, at the end of it is 25% on GDV, 25% profit on GDV, which is just over 2 million profit.
And sorry, just to reiterate a couple of things. So how many flats is it, Yuri?
14 apartments and a large commercial unit.
And what was the total build spend?
Total construction cost is 2.640 and contingency 184.
Okay. And so what do you think do you think is it looking for another investor? What do you think is the way forward for this deal?
Yeah, well, I don't know if anybody is using BrickFlow, so I put all the numbers into the BrickFlow. That's a platform that has a lot of lenders, and it's like comparethemarket.com for the lenders. And obviously it pops up, quite quickly. And with all the figures, all the profits, all the money you need to put in, it will tell you if you are wrong in your building cost figures or any other figures. It will tell you the stamp duty and all that kind of stuff as well. So quite useful tool, and it does it in minutes. So I went through that, and yeah, there were a few lenders, obviously, to begin with, where you need to put a little bit less money, but there is less profit at the other end. But the people I like is crowdfunding, and they are in there as well. So they required 1.1 million down, and the profit is similar, it's just over 2 million, which is I think 120%. 120% on the money involved, money you put down. So yeah, the other interesting thing, so I thought, you know, crowdfunding, and I'm listening for their podcasts and clubhouse rooms and you know, webinars and all that. Basically, you are dealing with people rather than the sharks that are lending, you know, bridging loans and development loans. So they are on your side, you know, they will work with you. They'll visit the site. They will see, you know, how you're getting on with stuff, and they will help you if you get, you know, in a little trouble, which, as you know, will happen regardless of, you know, all of your homework. So the other interesting thing about this is he found a buyer for the building already, and that's a chap from Hong Kong. He said he's got investors that will buy, you know, all the flats, and he wants to buy the commercial part himself. And he's happy, you know, to sign the contracts and all that. So I thought the way to structure this, if we can exchange the contract, and again the GDV is nearly 10 million, then they'll have to put down £1 million, and if we can use these towards the deposit, and potentially for the chap that is arranging all this with the Hong Kongese, if we can potentially just sell it or give him the freehold for the work he does, you know, and that will give us most of the deposit we need to put down to start the build. And obviously, yeah, that's our part in we'll have to find another few investors, you know, to start the build with, and to do bits and pieces, but that will be, you know, we won't need to share 50% with the family office in this case. And
can I come in there? A couple of things. When you're talking about crowdfunding, you're talking about crowd property. You're talking about a particular crowdfunder. You're talking about crowd property.
Yeah.
Yeah, that's you know, it's like generic crowdfunding is a generic term, and you're talking about a particular company.
Yeah.
It's called crowd property.
Crowd property. Yeah, sorry. Yeah, exactly that.
One's a generic term, one's a company. You know, like a vacuum cleaner and Hoover. So it begs the question though: if you have a buyer in China, Hong Kong, who wants to buy the property, right? Why not structure the deal in the same way as you would with, developer? When you're developing social housing, you know, for a housing association, what you do is you do a contract and you sell the property on valuations, and then they release the money to you as you go along. So as opposed to bringing a lender in at all, I think if you've got a genuine buyer for this property and they're serious and they're funded, right, then you should be able to use their funding to build the property out. I think you've got somebody in the mix here if you've got an end purchaser that you don't need. So you've heard of a thing called vendor finance. Well, this is purchaser finance, right? So if you do social housing, I mean, we're working on 96 units at the moment for a housing association, and we're arguing about 10 grand a unit at the moment. No, we're not arguing, to be honest. We have told them they've got to pay extra 10 grand a unit. There's the argument. And once we settle that and they agree, right, then what will happen with that is they will commit that amount of money. And what will happen is it will get paid down as the development's built out.
Yeah.
So I think if you're serious, I don't think there's enough profit in the deal, to be honest with you. But looking at the numbers that you've given, but if you do have a real buyer, then you really don't need a lender. You don't need crowd property. Simon and his friends will be so glad to hear that I said that. But you don't need that if you've got a real buyer. So there's a way to structure this deal where it's actually paid for by the purchaser. Now that depends on how the purchaser's financed and how much of their finance is borrowed or how much of there is investment funding. The likelihood is that if that's coming from China or Hong Kong, that'll be investment funding, because the Chinese are very keen on buying Britain at the moment in so many ways. But one of the ways that they're so keen on buying Britain at the moment, besides their technology and all of our companies, is they're also quite keen on buying our real estate. I think one day we'll all speak Chinese. So there's a way to do this that means you don't need a funder at all, I think.
Yeah, and we can pass to them some of the savings we're gonna have on interest rates and stuff.
Yeah, I'll give you a kind of smaller version of that. One of the guys I work with as a consultant, I helped him find a development site, and it was a farmer that had the development site, and he was running around like mad looking for investment and looking for funding. And I said to him, why not do vendor finance? And he says, what's vendor finance? I says, let's speak to the farmer and let's see if the farmer will actually take a little bit more money for his land, more money, not less money, because everybody goes for less money, BMV. And I said, let's see if we'll take a little bit more money. I said, let's have an open conversation with him. So I prepped my the chap that I work with as a business consultant, and I gave him a whole kind of script to work with. And he went to the farmer and he said, look, cards on the table. This is what I'm going to pay you. This is what it's going to cost me to build. And this is what my finance is going to cost me. Now, if you don't desperately need the money today, what I will do is I will save some money on my finance and I will give you extra money for your land if you will finance the land. And the farmer said, I'm in no rush for the money. That suits me fantastically. You give me the deposit that you were going to pay the finance. Essentially, you were going to pay the finance company your share. He says that will act as a deposit. We've then got an agreement. And instead of me getting X amount at the end, I get Y amount. And that suited both parties, because obviously my client saved a lot of money in terms of finance and the farmer got slightly more for his land. I think the Americans call that a win-win. Sorry, somebody lost out. The greedy finance people, they lost out. That's who lost out on that deal.
Yeah, that's why I like crowdfunding as well, because there's real people making real money, you know, rather than, as you say, Paul, I don't want to mention because I might, end up going to them, greedy finance people. But when you take the money from real people, that's, giving them, much better.
One thing I'll say about, I don't advertise anybody, but one thing, and I've never used them because we're self-funded, but one thing I'll say about crowd property is the guys actually understand property, unlike a lot of finance companies. I met Rupert. Rupert came up to Scotland from crowd property, and we had a meeting, and he spent a couple of hours with us, and we talked about a couple of the developments that we were actually selling, because we were talking about whether they would finance them for somebody else once we sold them. And I just wanted to meet the guys because they seemed to know what they were talking about, to be honest with you. It's very rarely I find in this industry now people who actually know what they're talking about. I find a lot of people who don't, but not so many who do. And they know what they're talking about. And it's good to talk to property people about property.
Yeah.
And a heck of a lot of funders know nothing about property.
Yeah.
So those guys do.
I've used Leo crowdfunding, so I'm in the process of putting a project on their platform quite shortly, but that's equity crowdfunding, which is slightly different. but it's been quite an interesting process.
Yeah, see, I think that's really interesting. I think the equity crowdfunding is really interesting for these kind of, especially these apart hotel commercial models where there is this kind of issue of potentially having to leave money in for a certain amount of time. So it's not like a quick, you know, buy, refurbish, refinance, and you can be out of it within 6 months to a year. You know, generally, you're looking at a couple of years books. And so that can be complex. So yeah, we that's certainly something that Yuri and I've been looking at. We've got another project which is a bit on the balance at the moment, whether that will go ahead, but that was definitely one of those models, because it's, as I understand it, Wendy, that they, you know, there's the propensity to have the funding for longer.
Yes, yeah, I think there's one project on the platform now where the offer is, it's a 7-year investment, and at the end, throughout that 7 years, you're getting a profit share, so you're earning interest, and then at the end of the deal, you get your stake back with whatever the uplift in the value of your stock is. But
and do they help you sort of structure that, or
yes,
is it, do you come in with the ideas?
Yeah, I think I kind of went to them with some ideas, and they've, you know, together we've kind of put together a deal that we think will work for the platform. You know, they know the platform, they're investors, and yeah, so it'll be interesting to see how it goes. We're not doing a 7-year deal. I think ours is 3.
Fantastic. I love that. Brilliant. Okay, so did anyone have any more questions for Yuri on that particular one? I mean, it might be interesting, Paul. Yeah, you felt that was a bit tight for you. What would you normally look at? So that you would...
I don't think there's enough margins in that deal, because you know, at the moment GDVs are very hard to predict. I mean, that deal's kind of a 1.5, 2 years away. If you broke ground tomorrow morning, it's still a 1.5, 2 years away. And predicting GDVs at the moment, particularly in London, which is always a volatile market, you know, it's a great market when it's great in London, and it's not so great when it's not so great. It's a very, I would say that across the UK, because people talk about the UK property market, and there's no such thing as the UK property market. There's UK property markets. So there's, you know, the Scotland, north of England, south of England, Wales, Ireland, and London, right? London is London and Aberdeen are the two most volatile markets. One is driven by oil prices, so Aberdeen kind of goes up and down based on oil prices, and London goes up and down based on how people feel, which is a very strange thing to bet on, how people are going to feel in 2 years' time. And it's, you know, there's no practical reason why the prices go up in London, and no practical reason why the prices go down. It's very much based. It's very much based, like the stock market is, on people's feelings at the time. So I would not have thought, in the market that we are going into at the moment, a 25% margin in London is enough, because if London moves by 8 or 10% in the wrong direction, then that takes a 25% margin down to a kind of, you know, somewhere around about an 18% margin, 17% margin. And then if you have on the other end of that issues with supply and demand in terms of materials, then that could keep it up. So you could end up with a 10 or 12% margin on that. And that's a lot of money to put out for a small margin of that amount. So as an angel investor, that would be a very high risk project.
Presumably, if you were to do what Paul suggested earlier and get the future buyer to start paying for the project earlier, then you're going to not have any finance costs.
So if
you've got a cost of finance in that project and remove that, then that would make your
what I could see in here, you know, as a must is the exit, and if you know, we can structure the exit in terms of, you know, they put the deposit down, it's either, you know, 10 or larger percent, and him, you know, because he's set up to do these developments, he's got his team, he's got everybody, you know, than him developing it. You know, I mean, we don't mind because I'm based in London. He's based in Cumbria. You know, I don't mind giving a hand, you know, where I can and stuff. But yeah, that's the two major parts, is him developing and the exit to be nailed. And if we can structure it the way Paul just mentioned, then obviously there's no brainer in there. Then we've sold it, you know, before we started to build. So
And they financed the build. So
yeah, they financed the build. Yeah, so all we take is the margin. You know, whatever margin is there, you know, is basically is just like, you know, a fee on the top of whatever you do, because you're doing it for them, you're building it for them.
I think if I was doing that deal, and if they have half decent solicitors, which they probably will do at these sort of numbers, what would probably happen is you'd have a minimum and a maximum.
Yeah.
Right. So because they're not going to want to commit to values 2.5 years or whatever amount down the line from here, or if they do, then that would be very, very good, particularly in this market. But what you're more likely to be able to do is say, well, look, you know, look at the figures and say, we will sell you it for a minimum of X, right, depending on the market, or a maximum of X related to the current market value when the project is finished, right? Which means that the risk that they are taking is the market value drops below the minimum, and the risk that you're taking is that the market value usually exceeds the maximum. And that way, both people have got skin in the game in terms of taking the risk. To get them to commit at this point in time for values 2 years down the line at a set figure, they would have to have some very poor lawyers if they were willing to do that. Whereas if you could say, look, this is the minimum value, and you know that you're making a profit at that value, and you have a maximum value, and they know that that's the most they will ever pay, and then you base the sale price, the actual sale price, on where the market is at the point in time when you're ready to hand over. That would be the way to structure that deal. Yeah,
I believe because that happened a few years back when China restricted, you know, the money to leave the country, and the Chinese buyers put 10% deposits already, you know, with exchange dates set up on you know, apartments in London, quite expensive apartments in London, and they couldn't get the money out of the country, so they lost.
But that with the current rules coming in from China, that would actually suit you. So for individuals, it's different for corporate, and if they set it up as a corporate organisation, there's not a problem with it. But for individuals at the moment, it's £50,000 per annum, right? But that would suit you because what you do is you time your years. So each individual investor can actually put £100,000 in over actually a few months, because it depends on the timing of the year. So there's ways round about it. We brought some money in from China fairly recently for one of my clients, and that's how we did it. Was we actually managed to bring £100,000 in for the client, but over 2 years. But it wasn't really 2 years; it was a matter of months between. So you know, that was 1 year, and they were coming to the end of that year, and then put 50,000 in, and then another. It was actually 30,000. There's another 20,000 to come in this financial year. But if you're doing it as corporate, so if they set up in China that was a corporate organisation that was buying this property, then there's no limit to the amount of money that a corporate can bring from China into the UK.
Yeah, and yeah, there could be, you know, a quantity surveyor. If they put all the money, you know, into solicitors, and they release as we build, then it's a good security for them as well. And yeah, a quantity surveyor, you know, can invoice them, you know, as we go, and yeah.
Well, the safety for them, I know we're coming up to time, Emma, so I'll make this quick, but the safety for them is they would actually be acquiring the land from day one if you structured this properly. Essentially, as opposed to being a developer, what you then change into is you're a construction company that's working for them, right? And that way, you make a fair amount of profit, but you take absolutely no risk. So that's the way I would structure that. You're essentially, they would own the land, so they've got security, and you're essentially a construction company working for them. Anyway, I'll hand over to Emma because I know we've only got a minute left.
Thank you. And
I never heard about any of my windswept and interesting and exciting deals.
I know, I think we need to come back. Yuri, I think you need to mute. I think we're getting some reverb from you, sorry. Yeah, I know, and I had some things I really wanted to ask you as well. So maybe we'll come back and redo this again. But Helen's got a quick question. How many people, this is for you, Yuri, how many people are there waiting for a slice of the cake at the end of the project?
Well, I can see clearly that Paul wants, a little slice already.
I've always been a great believer of get a little slice of everybody's cake and you have a very big cake.
Yeah, this is why he is getting shaved all of the time, just before the meetings. Yeah, it depends who is involved, obviously. He's just a developer, and us, if we can help him, obviously, this is it. And yeah, the financial costs, it depends where the money comes from. If it comes from the buyers, then we will, we'll waive that to them, so they'll have savings on that, so they will benefit from this. So yeah, it's not too many people just yet, but yeah, it's got a few sites as well, so it's not just one. He's got 3 sites in London, and then 1 in Kent, and then a few up in Cumbria, but that's his neck of the wood, He is happy to do that on his own, but yeah, down in London, if we can start structuring this, he's got a few, and they're not very large, not hundreds. 1 is 9, this one is 14, and that sort of size, but quite expensive apartments as we can imagine.
Brilliant. Okay, thank you. Oh, well, really interesting. Yes, we didn't get across to answer everything that we had, but we did our best, and some really interesting things. And I can see, I loved, Jamie said he came to get some nuggets and he got his nuggets. So that was good. I liked that description. So thanks so much for that. And I can see so many of you have put some questions there, and I could see Ingrid had even raised her hand, but we literally never really got round to it. So apologies for that. So guys, it is now the Easter holidays, and so therefore I will be away for the next 2 weeks, so there'll be no more Clubhouse for 2 weeks. It may be 3, it depends how calm I become, or whether I'm absolutely chomping at the bit to get back. But imagine that I will be back not the next 2 weeks, but then the 3rd week. So what we might try and do, Paul, is and if the other 2 are available, we might try and do this again, because I know there was a few more things that would be worth chatting through from that as well. But yeah, thank you so much. I know we've run over, but let's just have a quick roundup from everyone. Wendy, yeah, any sort of closing comments? I know all I can say to you is good luck for Friday.
Yeah, can't wait. Good luck, Yuri.
Fantastic. Yuri, any closing comments?
Yeah, thank you very much. Great, exciting deals, Wendy. And thank you very much for your golden nuggets, Paul. Yeah, we'll definitely sit down and think with the developer about this, and see if we can have a meeting probably with the Hongkongese guy. And yeah, thank you very much. Good luck, Yuri and Emma.
Thank you.
Paul, a closing comment from you.
Well, see, Yuri sitting down with the developer with my ideas, just let me know where to send the invoice to.
Don't you worry, we'll keep you on side, Paul.
It's been an interesting day, and they both sound very interesting projects. And Emma, Wendy, I'm in your neck of the woods probably in the next couple of weeks. So if you want to touch base, we can have a chat, and I'll have a wee nosy at your development and pass a critical eye. That just put her off the idea entirely, didn't it?
No, I'll take you for lunch.
Okay, so I look forward to joining you when you come back from holiday, Emma.
Brilliant, brilliant. Thank you so much, guys. Well, look, it's been a fantastic time. As I say, a couple of weeks off to rejuvenate, and really, really look forward to coming back afterwards. So yeah, we'll all keep in contact. And Paul, I might touch base with you because there were some things that I'm really keen. We've been finding out about GDCVs, which I did not know. So yeah, if anyone, if you want to tune in next time, we will be discussing GDCVs, which are genuinely diverse commercial vehicles. So that's one to hold you on a knife edge for you to come back next time.
I think you just mentioned my whole portfolio, did you not, Emma? Is that not a description of pretty much my whole portfolio?
I love it. I love it. Okay, guys, well, we shall shut down now, but really great. Thank you so much, everyone. And if this has been useful, then please do share it to others. It will be, it is on Facebook Live, so you can find it under Emma Howitt, Pure Abodes. And then also it will be up this week. Well, the main one should be up today on YouTube. So again, Emma Howitt, Pure Abodes. But it also will be broken down into chunks as well, and we'll be talking covering off each of these deals as well. So yeah, trying to get out to the masses, so to speak. So brilliant. Okay, guys, really great to see you. Take care. See you very soon.
Bye.